Hey, y'all, check this out. Terra founder Kwon proposes Terra revival, including token redistribution plan. Let's dive in. So looking at the article here, after 2 days of silence, Terra founder has issued a new governance proposal to keep the community alive and compensate token holders. Now, I have some weird feelings about this. We're going to dive in, and I'll talk about it later. Terraform Labs co-founder Do Kwon has tabled a proposal to preserve the Terra ecosystem following the historic depegging of its algorithmic stable coin UST and the resulting of a death spiral that pretty much plunged Terra Luna tokens to practically zero that we've seen last week. In Friday's post, Terra's research forum, Kwon said the Terra community must reconstitute the chain to preserve the community and the developer ecosystem. His proposal, which was a response to the validator groups discussing the possibility of forking Terra chain, involves compensating UST and Luna holders who were unwilling to sell their holdings during this week's price collapse. So I have twofold about this. Now, I'm speaking to someone, I didn't get into Terra, though I did buy some of this crash. I did not get into Terra pre-crash. So, with price of being $100 and all that, I didn't touch it. So, my feeling about this, and I have close friends who have lost hundreds of $1,000s with Terra. I do not necessarily agree, philosophically with if we buy a token and it crashes, that the community can now fork it and give people back the funds. It's almost like a bailout, right? That's just me personally. And, I did not lose money, but I still have this philosophy when we talk about crypto. Same thing we have in Ethereum. Back in the day when I got into crypto, Ethereum was able to make a mistake and fix it by giving people, ETH back. And I just philosophically don't agree with that. But either way, we'll dive into what they're doing. Kwon proposed validators should reset network ownership to 1 billion tokens distributed among LUNA and UST holders, as well as a community pool to fund future development. Specifically, 40% of the newly distributed tokens would go towards LUNA holders, and they're saying that people who held LUNA before the depegging event, 40% would go towards UST holders on a prorated basis at the time of the new network upgrade. 10% would be allocated to LUNA holders just before the chain halted operations, and the remaining will go to the development pool. So they're saying that even if the peg were to eventually restore after the last marginal buyers and sellers that were capitulated, I don't even know what that word is. The holders would LUNA, I guess the buyers and sellers were freaking blown out. I guess margin called. The holders of LUNA have been severely liquidated and diluted, that we will lack the ecosystem to build it back up from the ashes. So they're pretty much saying that it's over. It's over. And I think we see that in the price, but I don't think it's right to just, fork something off and print more, not print more, but give more people at loss. I mean, we're all investors and we lose sometimes. And I think another scenario, I can't even read this. Hey guys, check this out. Breaking news. Do Kwon proposes Terra revival, including token redistribution plan. Let's dive into it. After 2 days of silence back on Friday, Terra founder issued a new government proposal to keep the community alive and compensate token holders. Terra Labs co-founder Do Kwon has tabled a proposal to preserve the Terra ecosystem following the historic depegging of its algorithmic stablecoin UST, and the resulting of a death spiral that plunged Terra tokens to practically zero. Now, we did not buy Terra pre-crash. We bought it after the crash for almost next to nothing, as really just a high risk play just to see what was up. And what they're saying is they propose that the validator should reset the network ownership to 1 billion tokens distributed among LUNA and UST holders, as well as the community pool to fund future development. Now they're trying to save the project at this point after this crazy thing that happened. And what they're saying is specifically the 40% of newly distributed tokens will go towards LUNA holders that held the asset before this depegging event. So, and then another 40% will go towards UST holders on a prorated basis. And pretty much this is at the time they're saying of the new network upgrade. 10% will go to LUNA holders just before the chain halted operations. Another 10% will go towards the development pool. And so right now they're pretty much trying, how can we save it? How can we save it? We dumped our Bitcoin trying to save the UST. What can we do now? And I feel for the people that lost money. I know people that lost big money, 6 figures and up on Terra. So I've seen this not necessarily in my portfolio, but people close to me have been wrecked by this almost overnight. So seeing what they're trying to do, I'm not necessarily for just forking. It seems like a Ethereum situation, and I think that's why Vitalik is saying, the co-founder is saying the average smallholder impacted by Terra's stablecoin crash should be made whole, and cites FDIC's 250,000 as precedent. I do not think this is a good idea. I do not think this is a good idea at all. Pretty much trying to, like the FDIC does with U.S. bank accounts, we should do that with Terra. I don't think it's the same ballpark. I do not think it's the same situation. And I don't necessarily like that he is aligning it with the bank's FDIC insurance policy, because we're in crypto. We're in, everything's a risk. We believe in crypto, but we're in a risky business here where, there are high probabilities and this does happen. But that's why we say diversify. That's why you do not put everything you have into one project. That's why you don't put everything you have into the market. So if this happens, life can still go on. So this whole thing, I just do not like it. We'll look at what he's saying. In this, he's saying he strongly supports this coordinated sympathy and relief for the average USD smallholder who got told something dumb about 20% interest rates on the US dollar by an influencer, personal responsibility, and for the wealthy. I just think, they're saying prioritize smaller wallets, people who had a couple thousand or more USD deposited. I think, bringing this isn't how it works. This is not how it works. When you're investing, you just can't, something goes wrong. Let's say we invest in Walmart. Somehow Walmart, something goes wrong and the stock plunges 90%. Walmart doesn't have the obligation to, we're going to give you money since you lost 90%. We're going to do what we can and refund 90% of what you lost because it's no. Us as investors into Walmart, okay, we take on that risk investing into Walmart. And this is what kind of the SEC is talking about. Let's bring Ripple into it. SEC, where their protection of consumers, this kind of validates their point when things like this happen. Because now we got people like Vitalik Buterin saying, oh yes, we need to insure them up to $250K per person because the small people were impacted. They invested their last dollar. That's why you do not invest your last into this stuff. You don't invest your last into crypto. Okay. Some of us take higher risk than others. And if you decide to invest higher risk, that's cool. But you got to be able to stomach and deal with this as a potential. This is a potential. I came into crypto in 2017. All right. Bitcoin in January spiked up to like 20 grand. From that point, it was all red for 2 years, a year and a half, 2 years, all red. Nothing but blood on the streets. Now, it didn't happen like this. It wasn't just, a collapse. But at the same time, we're investing into this tech. Okay? There's no guarantee. But you want to diversify. And you do not want to put 90% of your portfolio into, one asset. If you cannot stomach something like this happening. Okay? So, bringing the FDIC insurance up, I just don't think it's a good look. But it makes sense because when, the Ethereum had its issues, what do? Oh, we just gave everyone back their Ethereum because it's our fault, right? And that just, I didn't touch it. And that's why I missed out on Ethereum. I didn't miss out. I got in at the dip again. But that's why I didn't touch Ethereum for the longest time. Because stuff like this, where you're considering just, okay, we made a mistake, and now we're going to try to, do what the banks do and take care. Like, it's just not what crypto's all about. And that's just my opinion. And my heart goes out to my friends who've lost money. I get it. But my friends who lost money aren't calling for some refund. It's just the name of the game. They understand it. It's a possibility, which is why you diversify and build a foundation across multiple different solid projects. Okay? So going into what he's saying here, he's saying that his comments were newsworthy in light of President Joe Biden signing an executive order in March, ensure responsible innovation of digital assets. And the crypto community is wondering what responsible means. An interesting unrelated one is Singapore employment law. Buterin treated stronger regulation for lower earning employees and a more figure it out yourself approach for the wealthier. In my opinion, things like this will be good hybrid formulas. So you're pretty much saying that, and this is a guy who's already made billions, okay? He's pretty much saying, look, let's line it up pretty much what the SEC does. We want to protect consumers, aka protect people from skipping wealth brackets, right? Skipping income tax brackets. And we're going to make it so you can't invest here unless you have here. And pretty much the rich stay rich, the poor stay poor. That's what I'm seeing here. Talking about the stable coin a little bit here, going in here, we need to really emphasize that there are that the two are very different. When he talks about uncollateralized stables versus collateralized stables, UST is an algorithmic stable coin, which means it has no reserves. Instead, it holds value based on the algorithm that is coded to strike balance between the stable coin and the partner coin, which was LUNA. Every time USD token is minted, an equivalent of $1 in LUNA is burned or removed from circulation and vice versa to maintain the peg. So, of course, that peg didn't turn out right. USD is trading around 14 cents. UST is trading around 14 cents, down 85% in the last 7 days. LUNA remains at 100% loss in the same time frame, trading pretty much at zero. So I'm not, I don't want to seem insensitive here. I don't. But at the same time, just, we need to diversify. That's one of the things we talk about here. Diversify. Don't put everything in one bucket, and always, take profit, become an expert, diversify, and look for a 3 to 5 year bid with whatever you're looking at. Just because you fall within the market cycle, you can take profit to ultimately help you move forward and become financially free with crypto. So we'll dive into this more. I'm just not digging it. And I sympathize with people that lost money, but we know it's the name of the game. I bought the crash, just to see. I'm still down. I bought maybe 5-10 million Terra. Still down, but at the same time, it's about diversification. I've seen stories, people, put everything into Terra and believed in a project, which is, we do believe in some project. We believe in Cardano. We believe in, Bitcoin. And we do believe in some of these projects, but at the same time, we will diversify. So if something does happen, anything can happen, right? Something does happen. We are not all in on one project, despite our belief in the project. Anything can happen. So I hope it just gave you some value here. Hope you guys keep moving forward in everything that you do. And we'll see you in the next video.